Hey, welcome back. Look who's here. Dave Schurman. Yeah, Firstontario Credit Union, back for another segment of Finance Friday. So Dave, the Bank of Canada raised interest rates again in October for the 6th time this year. A recent survey revealed that many Canadians obviously concerned about their rising mortgage payments.
Yeah,
what do we do here?
That survey was done by BNN Bloomberg recently, and after, as you mentioned, the 6 Bank of Canada interest rate increases, there's 2 types of mortgage rates. Variable and fixed. Okay. Now, variable rate is tied to the prime rate that banks, credit unions, and other lenders set their variable rates on. So if you look at that Bank of Canada rate and the prime rate that's associated with it, it's gone up 6 times since March. It was 2.45% in March. Now it's 5.95%, so almost 6%. It's more than doubled and gone up 3.5%. So if you've got a variable mortgage, the interest that you're paying every month or a variable line of credit is pretty well double what it was before. Now, if you've got a fixed term, your payment and your rate hasn't changed until the term comes up. So a lot of people in that survey are worried now that, you know, you took a mortgage out, 5-year mortgage in late 2018, early 2019, it's coming up for renewal now, and they're going to see a big hike in their payment.
Like, how big?
Well, just to give you an example, so for every 1% increase in interest rate, for every $100,000 you owe, your payment would go up about $50. So on an average mortgage, which is about $400,000, and a 3.5% increase, that is about $700 a month more in a mortgage payment.
Wow.
That's a lot of money. And you take into account that you've got to earn $1,100, $1,200, $1,300 before tax in order to net $700 to pay your payment. And then if you add in the increased cost in goods and inflation, it's tough now for people to cope, and that's what this survey revealed. A lot of people are finding it hard to cope.
What do they do? Do they go variable or do they go fixed? Because how long are we in this for?
Well, I mean, nobody's got a crystal ball. The Bank of Canada did indicate that they may raise rates again before the end of the year. They may meet again on December the 7th. So there's a good chance there'll be another maybe half a point increase. So if you've got a fixed term mortgage coming up for renewal, a lot of lenders will renew early. So if you want to renew before the next Bank of Canada increase, you might want to talk to your lender now. They could also give you a rate hold. So I'll guarantee that rate, and that'll give you maybe a month or so to look around and see if you can get a better rate. Now, one thing to keep in mind, that if you renew with the current lender you're at, you do not have to requalify for the mortgage stress test. But if you move your mortgage somewhere else, you've got to requalify. So you want to make sure if you're planning on moving your mortgage that you can qualify for that stress test.
How important is that stress test now?
Well, I tell you, I love the stress test from the minute it came in. Bank of Canada or Department of Finance introduced it about 2018. A lot of people in the industry, brokers, real estate agents, were concerned about it because people couldn't buy as much house as they wanted. They couldn't borrow as much as they wanted. But it's proven now to be effective because rates have gone up more than the stress test was.
Nobody thought the rates would go up this quickly and this fast.
No,
right?
People said rates aren't going to go up 2% in the next 5 years. Well, they've gone up more than that in the last 8 months, so it can happen.
What do you guys do? We got to get going, but quickly, do you just give people the options when they're sitting down with you and knowing what they can afford?
Well,
that's what it comes down to.
Number one, you figure out your payment on the various terms, and the first thing is you have to be able to afford the payment. So that's number one. Assuming that you can afford a range of payments, then okay, let's look at the options that you have and help make decisions on what's best for you. Again, you're coming on a variable rate, maybe a lower fixed term as rates may come down in a couple of years, maybe rather than go 5 years. So there's options to look at, and it's best just to consider them before you make a snap decision.
You just feel for all those people that wanted to get into the market the past couple of years and then got into the market and maybe got in a little bit more than they should have. But again, that goes back to the stress test because they had to pass that. All right, great to see you, Dave. If you have a financial question or topic that you want to be covered by Dave, email your questions to FinanceFriday@firstontario.com or get in touch through Twitter @Finance_Friday. If your question or topic is covered on air, you can win a gift card from a local business in your community.